What's going on, guys, and welcome back to another very exciting video. Today we are going to be talking about Google, and Google is a company that I own. They had some interesting volatility after they announced their latest earnings. So what I want to do in this video is I want to talk about those earnings. I want to go into the stock, and specifically I want to take a look at their valuation, because Google is actually trading down at a very interesting valuation, especially compared to the S&P 500. So we're going to go over all of that in this video here today. If you enjoyed the video, make sure you drop a like down below, and if you want to see more videos like this one, make sure you hit that sub button. And if we take a look at the last month for Google, we could see that they announced their earnings on October 24th, and the stock was trading at almost $139. However, after they announced their earnings, the stock fell all the way down to $122, which is almost a 12% move down. We will take a look at their numbers here in a second, but after that move down, we can see that the stock rebounded nicely over the last couple of weeks, up almost 6%. And when we look at their EPS and revenue numbers that they reported, we see that they actually beat on both of these numbers. They reported $1.55 of EPS, which was a 7% beat compared to analyst expectations, and revenue they beat by 1.2%, reporting $76.69 billion. However, this 12% drop in the stock price came on the fact that Alphabet missed on their cloud numbers. Analysts were expecting Google to report around $8.64 billion of cloud revenue. However, they only reported $8.41 billion. And the issue with the cloud market is the fact that Amazon and Microsoft are really pulling away in this market. We have seen them report solid numbers this quarter. However, Google coming in and missing expectations sent the stock lower, as investors were really expecting them to start catching up to these two other companies. We can see right now that Microsoft Azure has double the market share that Google has, and Amazon has almost triple the market share. Personally, when I look at Google's cloud business, I still see a lot of positives. We can see that year over year, they grew their cloud revenue from $6.87 billion all the way up to $8.4 billion, which is about 22% growth. Another positive for Google Cloud is that last year they actually reported a net loss of $440 million. However, this year they reported a net gain of $266 million. Another positive for Google is that they have finally hit double-digit growth in terms of their revenue again. They last year brought in $69.1 billion of revenue. However, they grew that number all the way up to $76.69 billion this quarter. And they have done all of that while decreasing their employee count. We could see that last year at this time, they had 186,000 employees. However, they have reduced that number down to 182,000. And this is something that Google has struggled with over the last couple of years. We have seen their employee count go up in a massive way, and we're finally starting to see them cut costs and keep their costs lower, which is helping their EPS numbers. When I look at Google's business, I think they still have a lot of growth in front of them. We can see that for next quarter, analysts are projecting an average EPS estimate of $1.62, and this would be up from $1.05 last year. And what excites me a lot is their 2024 numbers. We can see that the average expectation for EPS is $6.72. They have a low estimate of $5.52 and a high estimate of $7.45. And when we look at the forward PE ratios corresponding to their 2024 numbers, we could see that the average expectation results in a 19.2, the low expectation results in a 23.4, and the high EPS estimate results in a 17.3 forward PE ratio. And in my opinion, I don't think we're out of the realm of possibility for them to achieve this high EPS estimate of $7.45. I think if we start seeing the Fed cutting interest rates on the back half of 2024, this could easily be achievable. And when we look at the S&P 500, it's currently trading at a forward PE ratio of 18.62, which is basically in line with where Google is trading at in terms of its average EPS estimate. And if you ask me, I think Google has a lot more growth in front of it than a lot of other companies in the S&P 500. And the S&P 500 is trading at such a low valuation, even though the market has moved up over 14% so far year to date. I don't know if we'll see Google go below 120, but if it does, that's where I would be interested in adding more to my position. I've already built out a solid position in Google, and I like where I'm sitting at. However, if it falls below 120, that's where I get very interested in this company again. But keep in mind, that is all my opinion. Do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all of that said, I hope you enjoyed the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.